What is up, good people? Jungle Link here. Hope you're doing well. Pretty flat day within cryptocurrencies. Not a lot going on. We see a little price action out of Solana and Link, but outside of that, quiet day. Most things about flat, up 1%, down 1%. Not a lot to get excited about here. Now, what I'm interested in seeing next week when trading resumes, how much demand is there for Bitcoin ETFs? Because, of course, it launched. This is a historic event. A lot of FOMO, a lot of excitement. Beyond that, there's a lot of rebalancing going on out there. People were in Grayscale's product, which is wildly inferior. Even though it transitioned to an ETF, they're charging a 1.5% management fee. They're moving into BlackRock, Fidelity, ARK, and other ETFs that have much lower fees, just better investment vehicles. So once that all subsides, what are we looking at here? How much daily trading volume, how much demand is actually there? I have no doubt over the long term that will grow in a significant way, but I want to see where we stand now, and that will start to emerge over the next 30 to 60 days. We will see kind of where we're starting from and where we can build from there. Great interview by Larry Fink, CEO of BlackRock, and he's given his vision for Bitcoin, the broader crypto space. And remember this, he's saying Bitcoin is an alternative for wealth holding, emphasizing its role is that akin to gold. He really doubled down and says, I do not see these emerging as actual currencies. You have to remember, what products and services is he offering? Well, wealth holding, investment hedges. He's not offering you currency units to go out and spend. So, of course, this will be kind of his focus. But the great thing about open and decentralized systems, you can use these tools for any purposes you want. And, of course, people do use these as replacement to currencies, as an alternative currency, and they will continue to do that, no matter what Larry Fink has to say about it. He also acknowledged the potential for an Ethereum ETF. It's going to happen. It's kind of questionable of how long it will take, especially given how combative the current SEC administration is towards crypto. But sooner than later, this will expand to the broader crypto space. He also sees the growth of cryptocurrencies as an indicator towards a tokenized future. And he's right. Most assets, their ownership interests will be tokenized. They'll be held on a blockchain, and they will trade in a much more transparent and really lowering those fees. And it's just going to be the wave of the future. Most assets will trade in a tokenized form as we move forward. Last man standing, this article from the Wall Street Journal, just talking about the success of Coinbase, and they have emerged as massive winners. You see with this wave of ETF filings, 11 of them in total, 9 of them are using Coinbase as their trusted custodian. BlackRock, ARK, all the big ones. The only caveat to that is Fidelity, who acts as their own custodian. They've been building out this infrastructure. They've been pretty heavy into crypto for a long time, so they have that ability. But in the US, if you're looking for someone, Coinbase is your go-to. Now, they currently have legal problems with the SEC. They'll emerge from that fine and continue to go and probably expand their business globally in a big way. They're trying to make a push into Europe right now. We will see how they succeed. But right now in the US, massive success with Coinbase's business. Now, just want to bring this up shortly. I have them blocked, so I don't have all the info here. I don't need it. I'm not sure what's up with Charles Gasperino, if he's just mentally ill, if he's a sad little man with nothing to do. But he attacked the wrong guy here. He went after Jeremy Hogan. And Jeremy was responding to John Reed Stark, who, of course, as always, was just overly negative towards cryptocurrencies and to XRP. And he just said, hey, prepare for some love from the XRP community, Mr. Stark. Nothing wrong with that. He's not advocating violence. He's not advocating people to harass John Reed Stark. And here comes Charles Gasperino saying, interesting how this adult is advocating online harassment. If anyone is harassing people, it's Charles, not Jeremy. And we've all known Jeremy for a long time. He would never encourage us to go out there and bother people. He was just stating the obvious that John Reed Stark was a little too negative, and be ready for people to have a counter opinion and for us to give it to him, which is absolutely fine. Now, even though John Reed Stark is wildly too negative within crypto and within XRP, I have come to kind of enjoy, and I can read his stuff and learn something from it while stripping away the overt negativity, of course. From my main account, though, I can't follow him because the minute you retort something with John Reed Stark, he goes ahead and blocks you. It is what it is. But I just thought I would point it out that there is no way that Jeremy Hogan would advocate for online harassment. And once again, Charles Gasperino, the sad little man that he is way out of line. And I just can't believe that he would go after Jeremy in that way. News came out, Hong Kong Virtual Asset Consortium removing XRP from its global index. Why is that? Well, it's a top 5 index, and XRP is not in the top 5 anymore. Solana has replaced it. That's just how these indexes work. Nothing wrong with that. If XRP is not in the top 5, shouldn't be in that index. SEC, they're really pushing to get current financial statements that are outside the scope of the lawsuit. And so the concern is what they're trying to do is disrupt Ripple's current business. And we know the judge ruled that a lot of those ODL transactions, even though they probably shouldn't be, kind of lumped them in with the securities offering violations. How might this affect Ripple's current business? That's the concern here. And can the SEC get those and make their case and do something that would be harmful to current business? And so I made the point that shifting to doing things on chain, using an AMM, using a DEX for ODL might be the way to go. And people say, well, it was okay to use exchanges. Why would it be any different for ODL if you use the DEX? And I'm not sure exactly. Of course, this isn't a publicly traded company, so I can't tell you exactly how ODL works, but there has to be some directness there with those institutions where Ripple's providing XRP directly and taking payments in directly. Even though they are using exchanges to send and settle things, you have to have that or the judge wouldn't have lumped these transactions in with the securities offering. If they go on chain, if Ripple loads all their XRP up in an AMM mixed with all of our XRP, when an ODL customer is sourcing liquidity from there, they would have no way of knowing, are they using Ripple's XRP, my XRP, your XRP? So I think that's the thinking. It's a more efficient way where Ripple can use their XRP with institutions, but it's more of a secondary market where the buyer, the user, can't know for sure whose XRP they're using, and therefore it should avoid any problems with securities offerings, things of that nature. Because it was stated that if it happens on the secondary market, there's not that directness between Ripple and the institution, that it'd be fair and compliant. That's what I think, at least. That's the way I see it playing out. This is really a problem with the current regulatory state here in the US. Most of us think, hey, most NFTs are collectibles, right? They're not securities. As long as you're not promising to build out some functionality once you collect your money, things like that. But we see GameStop, they're shutting down their NFT marketplace over regulatory concerns. And this is the deal. We can say we think that NFTs are deemed as collectibles and not securities, but we don't know how the SEC will attack this situation. And so you have a lot of people that are just going to decide until we have clear rules just not to get involved. And so that's really what harms this space. When you don't have clear rules, you may have actual companies that want to do interesting things within the crypto and blockchain space, but they just decide, it's not worth the hassle, because you never know when Gary Gensler is going to, pop out of the sewer and hit you with some sort of lawsuit. We have this article here. It's titled, Ripple CTO cites lack of liquidity is a reason for Ripple's massive buyback. And I talked about this at the time that I don't think it's the end of the world, but I think it shows that Ripple's business isn't ready yet to either be a direct offering and go public or do an IPO. And that's why they're doing these buybacks. And so we got into this discussion back and forth on Twitter. And I had stated kind of that. And David said, well, employees care that there is a path to liquidity for their stock options, RSUs, or whatever. There's no particular reason it needs to go public. And so I sat there thinking about this for a minute. And I said, well, maybe kind of true. That doesn't seem technically correct. And I said, well, if there's such a liquid market for these shares, why is Ripple the one buying them back? Because again, that's not a good use of their capital, buying back shares. This is not a mature company that has nothing to do with their money. They have all sorts of businesses they're trying to expand. Why are they doing this? If there is such a liquid market. And then he said, well, there really isn't a liquid market. The market for equity in a privately held company is largely illiquid. And so that's my point. They want to go public, whether it be through an IPO to raise more money or just a direct listing, but they just can't right now. And some of that is the regulatory problems, but I think some of that is their business just isn't ready. They don't want to present those statements showing what their growth is with an ODL and liquidity hub and tokenization and CBDCs. That stuff needs a little more work to get ready. And so I think that's what they've communicated to investors. And they're saying, look, if you want to cash out now, you've been around for a while, you're a big investor, we'll cash you out. We got the cash to do so. You'll take some profits because it's going to take us longer to go public. I don't get this thing of saying, well, it doesn't really matter if we're public or not. And then at the bottom he says, but if we're not public, no one can really cash in on their stock. And that is a problem when you're looking at investors. It's a problem with bringing on new employees. If I'm going to work somewhere and earn stock options, I don't want illiquid stock options. I can only dump so much on Liquidity on people's heads. That's not a great market, right? So, of course, Ripple eventually wants to go public. Now's not the time. And that was my only point. This is not bullish news, but I think they're still going to get there. It just may not happen in 2024 or 2025. That's really more of a Ripple as a business problem more than an XRP investor problem. But I think it does give us a little peek behind the curtain, because if their ODL business was off the charts, I think they would do either a direct listing or an IPO, and we wouldn't have to wait. That was my only point. Kind of David confirmed that. And that's what this article is kind of citing. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.